Welcome back to the final hour, just after 3 p.m. Eastern Time on Thursday, October 9th. Markets stalling. That's the thumbnail. Gold and silver hit a pretty hard wall today. They are showing a pretty large red candle, which I'm assuming is some it's about time profit taking. And maybe we're getting a reasonable pullback. So I've got a nice little strategy to take a look at. I'd like to see some bigger dips, but it's a strategy that is risk defined. That also gives us unlimited profit potential. So I'm considering something in like the $500 to $1,000 range, going out to possibly January 2028. I put in a debit spread today on silver SLV. I'm looking at the same thing on SLV or GLD, and we could talk about that in just a few minutes. So, um, hope everyone is doing well. Markets for the day ended up winning the day, which no complaints there. I think my drawing tool is maybe shot for right now. Yep. Um, so we ended up taking a trade this morning that we needed price to be below 67.40, and it is. That was offering $1.20 profit. I think traders that have closed it out have taken all of at least a dollar of that $1.20. I closed it out for a $50 winner. And the other trade was part of my double ups where we had a trap up here for some profit and a trap right here at this 20 handle for some profit. We spent lots of time there today. This is just after 1 p.m. today. Here's 1:30. Here's 2:10. Here's 2:30. Here's 2:45. It was an 85-cent debit that was trading for up to $4 credit today. I know that's not max profit. That trade offered up potentially $9.15 of max profit, but to get there, you have to have this thing right back to 67.20, literally at the close in the next 47 minutes, and that's very difficult to do. But taking an 85-cent debit, turning it into almost $4 is a heck of a trade. So that was for double ups. That was a good win on the day. Ended up net positive. So win the day. That's fine. I did leave some money on the table because the daily profit play this morning was offering over $100 a profit, and I grabbed 50, and the double up was offering almost $300 a profit, and I grabbed like 130. So it's fine. I mean, win the day. That was the mo. That's the goal, and it happened. And I was also out of the trade pretty early on. I mean, this trade to me was done by about 1 p.m. I was closing up kind of both, and didn't really have to worry about the rest of the day for risk. So we will see. NFP back on the calendar for next week. Yep, but not tomorrow, right? Not tomorrow. So it doesn't look like there's going to be any data tomorrow for employment news. I wanted to talk about this strategy. I like silver a little bit more so than gold. What I'm going to look for here is we have a 21 period, 50 period. I think I'm going to put this trade on 2 times. One trade would be right here. Let me find my drawing tool here. So where is my brush? There we go. So one trade would be around the 50 period moving average, and the other one's going to be maybe the 144 to 200. It's going to be a ratio back spread, and that's just a fancy way of looking at a trade like this. So if I did it this way, there's a bit of a dead zone. Okay, so I could buy the 35 call, which is a deep in the money call, and I could buy the 40 call with 2 contracts and sell the 35 to offset some of that cost. Personally, I kind of like just doing it at the same price. So right now, SLV is trading at $44. What I'm looking for is if we pull back to this level's around 39. Okay. So let's say we pull back to 39. 39 live price. I'll put this here. So 39 live price. I'll look at the 35 callback ratio spread. Okay, if we pull back into, let's say, 35 or 33, 35 or 33 live price, I'll look at the 30 callback ratio. Okay, the reason I like this trade, it is a defined risk trade that gives me, all of the upside of a long call. I've got plenty of duration. It does allow me to chip my debit a little bit lower, so my break even isn't the full debit. It looks something like this. So let's say that price. I mean, this is fine if I treat it as such. It's like right here. I'm trading this for about $1,000 debit. Now I'm not that interested in taking the trade right now. But if we fall and I can move this down, it depends on if I want to go, at the money or in the money. I think in the money is a little bit better. If you traded call options with much success, you're probably trading in the money call options, to be honest. You're probably buying a 60, 70, 75 delta call option. What that does is that reduces a lot of the time value that you put into the trade. Basically, if you just get price to kind of stay the same, time doesn't hurt you as badly versus buying an at the money and out of the money where time is your worst enemy. So anyway, this is one way to do it where it's defined risk. So I can put on $1,000 and I go out to, this is looking out to January 2028. The nice part is there is unlimited profit potential. Now, I don't know if SLV is going to get to $80 or get to $90 or get to $100, but if it does, a trade that cost me 1,000 could be worth $2,900 in profit. If we get the triple digits, we could talk about $1,000 becoming 5K. That's not too bad. Okay. So this is why I would be looking at a trade like this out in time and also expecting some decent price appreciation. All right. Um, I mean, if we go up quickly, we could probably fall quickly as well. So I want to be cautious of just throwing this trade on willy-nilly because right now, if I put the trade on now and price goes against me, I'm just going to look stupid. So I would prefer that we get a decent price pullback to some of the technicals I've been watching. I have dollar cost average positions where I'm looking to buy $1,000, buy $1,000, buy $1,000, buy $1,000, and dollar cost average in. That should be enough on SLV based on those allocations to give me at least 100 shares to control. And if my cost basis is in the mid 30s, then I look at, okay, we just had this fantastic run. Silver's been up over 50+% for the let's go to the year. So let's go 12-month candle. Silver's been one of the best performing assets, and let's measure from the beginning of the year. So silver here is up 65% year to date. Good Lord. Up as high as 73% year to date on SLV. That's a ridiculous run. With it pulling back, and again, like one day doesn't make a trend, but it finally looks like for the first time in a while, there's a reasonable size to this pullback. So I could see us going sideways here. I could see us going sideways enough that these moving averages catch up, and maybe I'll consider putting on that trade if it's in the wheelhouse that I'd like. I don't mind spending like $500 to $1,000 on the trade. I put in a trade today for Project Options Edge on SLV. I did a 45 by 50. It's a bull call spread. I paid $1.65 for that. So I'm risking $1.65 to make $3.35. I think that trade is fine. On the callback ratio spread, that is something where I want to do something in the money. I buy 2 calls, I sell 1 call. They can be the same strike. You can move your sell call lower. You have a bit of a profit dead zone below your short strike, but you have unlimited upside, and it also pulls back your break even price. So if you like something long, that's not bad. If anybody's heard of the zebra trade, that's another one where you buy a 70 delta call with 2 contracts, and then you sell a 50 delta call with 1 contract. It looks something like this. So we could go. Let's see what the 70 delta is right now. I'll go out to, this is SLV. SLV out to the January 2028. Right now, the 70 delta is around the 30, we'll just say 38. So I buy the 38 call with 2 contracts, and then I sell the 40, which is probably going to be this like 45. So if I buy the 38, I sell the 45. I guess I can sell a little bit further out, something like that. Maybe the 55. Let's go 50. I mean, it's way out there. So that's my sell call. Again, my break-even price is around $47. Price is trading at 44. My break-even is just a couple bucks away. It is more expensive though. This is more expensive than the callback ratio spread by a decent amount. This is like almost $1,000 more. So if I wanted to sell a little bit, closer, reduces the debit size. I still have the unlimited upside potential. Tightens my break even a little bit and reduces the size of the debit too. So a couple ways to do it, right? But I like silver. I think putting it out there for a couple of years. I mean, this expiration is 2.3 years away. I would be bullish enough on silver, bullish enough on gold to kind of have this be like an option based campaign trade where, once we're running with kind of an unlimited upside call, I can obviously sell against it knowing where my break even is at. Right. So anyway, food for thought. All right. What else is going on today? Live price. We're trading at 25. If we somehow pin here at 20, that's a beautiful, beautiful daily double up alert today. I'm not in the trade. Is anybody still in it? Is anybody in my double up service and holding this thing a little bit longer? The issue that I traded, or the alert that I posted earlier, let me double check the alert. I'm looking for net profit since I'm playing the call fly, put fly combo. Net positive on the day. I mean, looking for price to fall to 67.25, 67.20 level and take 100+ return or better. I did exactly that. So let me see what it's trading for right now. This trade, let's go to SPX. It's down to, it was up to $4. Now it's down to 285, 275. Still a great win. More than what I took. I took a 220 credit. So if it's trading for 270 minus 85, that'd be 270 minus 85. You're still up 217% on that trade. Not bad. But it's kind of slipping away from the pin price, which is 20. But it cash settles as well. So if it's between 30 and 20, that is a dead zone. You're going to be in that bigger profit trap. But the perfect pin price is 67.20 if that's where it's going to be kind of sticking at the end of the day. Very difficult to do that at the close, but it's obviously a ridiculous reward to risk. It's like 9x or 10x your risk, which obviously feels fantastic. But anyway, it takes some patience and a lot of patience to hold towards the end of the day when all the magic in a butterfly spread happens in the final 30 minutes. Okay, and sometimes I don't mind kind of playing the hand to see if it gets right into that pin price or that profit trap, or just taking the profit when the whole point is I'm trading the upside or the downside. I just want to get net positive on the day, and I did. Okay. All right, let's check some currencies today. Let's go top down. So markets rolled over a little bit. We are sitting here, again, in negative gamma for the day. We had a bit of a fake out right around that, 65 top today. We flew into negative gamma once we crossed below 67.45. We came right down to our put wall around 67.20 and 15. The market stopped at the lows around 16 today. I didn't get filled on my put sides. I did some 6700s and 6690s that did not get filled today. Now that we're in the final 30 minutes, I think none of these are going to get filled. I'm positive, obviously. This one, 3 cents credit on a broken wing, that's not going to fill. This is a October 9th. What is this? 65, 75, 80. Oh, yeah, that was a credit. That's not going to get filled. So that'll be expiring. Okay. So anyway, the bull put spreads and the broken wing butterfly that I had set below price, not going to fill. So I can cancel those. But the winner was double ups, daily profit play, taking 2 winners on the day. So we'll take that. Had a nice masterclass today for waterfall income. We will do another waterfall income masterclass tomorrow for strategy 2. I wasn't going to showcase this, but I don't know, kind of hot off the press. I was, getting creative. Yesterday I had a couple of good meetings, and I've just been thinking a lot about, I'm building a software component for hopefully like a, December launch. We've got some, dev hiccups and backlogs, and I'm just kind of waiting for developers to kind of continue to make progress on my requests. But there is a service that I'd like to be introducing and incorporating hopefully sooner than later. And it looks pretty darn promising. So I wanted to show what that looks like. I will show you in here if I go to testing and type in these. So don't mind the name. We'll talk more about that. But basically, I'm looking at creating a grid system that at a 9, 21, 50, 100, I essentially want to line up like 4 grid trades for the indexes. You can trade this on SPX, trade this on SPY, QQQ, XSP. But I like this idea of just kind of following along week to week or month to month and trading, up to X amount, kind of a batch trade. If I could carry, 10 positions at a time or even up to 20 positions at a time, a lot of these trades, the max risk, these trades would be if you're into one contract trades. This tool's not gonna my drawing tool is not working here. So I was looking at trades where when hang on a second. So when S&P or NASDAQ or Dow or whatever your favorite index is, I'm just going to stick with S&P, just keep it simple. So when S&P hits a 9-period moving average, or when S&P hits a 14-period or a 20-period, I like the 21-period moving average. When S&P hits a 50-period moving average. And then we get a little bit deeper when S&P hits a 144 or 200-period moving average. Okay. So if this was all aligned, and let's say that prices were doing this, let's say this is price. Okay. This is the price. And then we have a 9-period, which is pretty aggressive, right? A 9-period is going to be very aggressive to price. The 14 or 21 period is going to be a little bit more passive. The 50 period, a little bit more passive. The 100, 144, 200 are certainly a little bit more passive. Okay, everybody follow me? But essentially what I'm doing is at any given time, this is just a vertical line and a grid. And if price is offering a dip, a dip, a dip, a dip, I'm looking to put on pending orders to create a spread trade that buys the dip. So based on the grid that I select, it'd probably be a maximum of 4 trades. Okay. And I can continue to buy just the dip of the more aggressive trade, right? If I just buy continued dips, like my timeline would be if I come back and review this trade, like, the first of every month, and we line up this trade, and I kind of pen my orders and modify my orders week to week. I don't see this as something that's going to be like super high maintenance, but I'll just be kind of tracking and monitoring my levels and modifying my orders based on these values. So at the most, I would say that we stack up maybe 4 trades at a time. If you wanted to increase that, say that I'm comfortable with defined risk of maybe up to 10 or 20 trades. That's for, I guess more of the comfort factor of like, yeah, I'll take 20 positions. If I did this all with one contract, it'd be around a $330 risk times the number of trades that I'm in. Okay. So if I get absolutely slaughtered in this grid, 4 trades, I'd lose 12 or $1,300, right? If I'm stacking up, tens, which would be, let's say that price kept bouncing off of, if we have price doing this and my, let's say my 21 period. Okay. If it bounces here, and then price goes sideways, 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 sideways. If I take all these trades and price doesn't go higher, then I can stack up some orders there and, possibly take on some risk. So I need to consider this, but I went back and tested this stuff for, 12 years where the markets had 7+%, 20% pullbacks, or 7+, 20% pullbacks or more. And we have lots of 10% pullbacks, lots of 15% pullbacks, tons of 5% pullbacks. Okay. So all that being said, I'm going to figure out, like, optimize wise, what's my risk? If I'm comfortable with this type of strategy, risking like 5% of my portfolio. Okay. If I'm comfortable risking 10% of my portfolio. Okay. But the returns have been pretty amazing. So I will show you. Here we go. So on the 9 period, and again, the takeaway here is that a bull market can last a lot longer than a bear market. The P&L on an aggressive 9 period, this is over a 12-year study. The average trade is one contract. So this isn't like some crazy, like, oh, Chris has taken like 10 contracts, 20 contracts. It's one contract. Okay. The win rate is around 70%. We have a take profit that is around, if we get in for like $3 and change debit, we're going after the full profit of $5. I'm only taking $5 wide spreads here. Okay. So on the 9 period, going back 12 years, if all I did was buy the dip on a 9-period grid, there's $115,000 made with a 70% win rate. Okay. A 20 period generated $77,000 over the same duration. So that same 12-year period. So we've got 115 on one level, another 77 on another level, and then the 50 period is another 60. So even adding these up right here, 115 plus 76 plus 59, it's $250,000 on just simple debit spreads over the course of 10 years. So is it, life-changing money? No, but it's 25 grand a year on one contract trades, risking about 330 bucks. So can it be scalable? Absolutely. If you take two contracts, you double this profit. You're up $500,000 over the course of a decade. That's not too bad. So how does this get worse? Like what happens? What's worst case scenario? Well, we enter into a bear market and we take a grid that loses. But remember, if I'm just continuing to participate, if we're below, let's say that my moving averages, if we go back to my moving averages here, I've got all these drawings. Hang on a second. Don't want to get too many drawings up here. So if my moving averages, let's say that price is here and then price falls aggressively. And if price is doing that in my 9 period and my 50 period or my 20 period and my 50 period and my 144, 200 period, if I have these trades lined up and then prices below them, there's no trades. There's no trades. What I'd be waiting for is if price is going to cross back above my 9. And maybe that starts out the bottom. Maybe it troughs out a little bit, but we start getting the recovery stage. Then we start to start printing back up where we're above the 9 period and above the 21 period and above the 50 period. The issue with like the lag of the higher EMAs or the higher values is a 200 moving average would be something like this, right? So you have nothing but a sell zone and then wait, and then a buy zone, but you're already, maybe let's say this is a, 20% decline from peak to trough. It's going to pull back 7, 8, 9, 10% before you get confirmation to go long again. So I want to be a bit more aggressive, at certain percentages that I would just be willing to kind of take a stab and then use my shorter term moving averages to get back in. So that way I'm still participating in the market over the course of a drawdown. And this is why I trade primarily indexes, because a pullback of, 10%, 15%, 20% is usually a good opportunity to buy the dip. A, horrible situation would be we have a 20, 30% correction. We have a 30, 40, 50% correction. Can that happen? Yes, it totally can. But I would still be comfortable in the long run of having bull markets that last a lot longer than bear markets, and we will be fine. So anyway, I think that's pretty exciting. It's a pretty straightforward way. It's not taking a ton of risk. It's something I can manage, every week. I look at probably running a service around like a once a month meetup, and we just maintain our grid levels. I'd like to build a custom indicator for it so we can kind of match our values at all times, and then we get ready to take our trades in our favorite instruments. I would probably trade primarily SPX and XSP. Just because they're cash settled, I can go credit spreads or I can go debit spreads. It doesn't really matter. But the goal is to turn profit as quickly as possible. Okay. It's very different from waterfall, because waterfall is not taking into account any pullbacks. Waterfall is just basically going with what the market's been doing for the last 12 years, in the last 30 to 40 years for that matter, which is, look, you just participate in waterfall income, you get paid on the regular. So I thought, yeah, I mean, there are there similarities as far as trading an index? Yes. But as far as like constant leveling or constant grid trading, it's very different. So I think for me, running a service and having some, option strategies around it, teaching the basics of a debit spread, credit spread, and running this with, like a once a month intense kind of like masterclass. And then we trend or we track every week and we just modify our orders, because we don't get filled. But what the reason I'm thinking about this is I am exhausted waiting for these dips, but they are coming. Okay. This market is going to find a 21 period. It's going to find a 50 period. Maybe that's all we get. And if this pullback is all we get and the market goes to higher highs, this is a perfect deployment. Right. So if we go back to the 21 or the 50 or the 100 or the 200, it's still, to me, it's a good deployment to stack up this as a grid, taking your levels, defining your risk. The chances of, let's say we get filled here at the 21 period. Okay. Well, if price is below this 21 period, if price is below this and it keeps going down, will I take one trade here, one trade here, one trade here, one trade here? So I take whatever I'm comfortable with, maybe 4 to 5 trades. Okay. If price takes time to get back up to these highs, maybe this trade isn't a winner, right? Maybe this is not a winner, but this one could be, this one could be, this one could be. And if I like participating on the upside, I can also participate on the upside. Waterfall is going to do it by default. Okay. This is more, constantly watching, navigating the ability to buy the dip. That's what this is. So I think in that sense, it's a little bit simpler. One thing that is tried and true. It's like if you buy the dip in these markets, it has been proven. Uh, Certainly, the last 30 years, it's probably one of your best things you could do. You want to make money in these crazy markets, you buy the dip. And the hard part is when we have these markets stretched and highs and all time highs, we have like 31 or 32 all time highs for the year, and it's just because we're going little highs, like a fraction of 1% higher. I mean, the reason I had this thumbnail for today, the thumbnail was market stalling, is look at where we are at, man. Like there is a ridiculous call wall at 67.75 today, and there is nothing happening for the last 1, 2, 3, 4, 5, 6 days. Yes, the market has carved out little tiny highs, but this is not significant, right? This is not significant. This is barely squeaking out any higher highs. This isn't giving me the confidence to be buying these highs or directionally at these highs. Um, what I am looking for is, does this market at least offer a pullback? We have had months of at least pulling back to the 21 period. And I think that it's probably sooner than we think. What could be the factor, the catalyst, the excuse for the market to pull back? Maybe the government comes back online. We push non-farm again tomorrow and it's out to next week. We miss a pay period with no back pay. Just in the eyes of workers, it doesn't look good if you're laying off government workers, not paying them, and they're still working, as the essential worker class, and they're not getting paid with back pay. That's not good, right? I mean, who would be excited about working for the last 2 weeks with no pay and knowing that it's not coming? Like that would be incredibly disruptive. So that could be a reason we're coming into a major monthly expiration here next Friday. Non-farm is supposed to be tomorrow, but it's probably been pushed back again. There's going to be no job release tomorrow from what I see. Okay. Mike, we talked about that today. So tomorrow's masterclass in waterfall income, will be talking about that. I don't do a 1-1-1. You've got the four. Oh, you have four in there. Okay. So 1-1-1-1. Got it. Is waterfall covered in your practical options? No, Lee, it's not. I'm happy to. I mean, if you want to grab like a one workshop with me, I'm happy to give you that strategy. A 1-1-1, 1-1-1-1. I do that in my project options edge class. So this one, let me go here. So project options edge, we do 1-1-1s. Waterfall income, we do either debit spreads, credit spreads, or it's the technical term for it is a put condor, where I do a combination debit spread and credit spread, and I finance the debit spread. I have a profit trap. We looked at it today briefly before the end of class. We're doing it tomorrow. Um, there's a way. So we've been very forgiving on strategy 2 this year, and I mean, I want to say we have like 10 positions open right now. And, and it's fine. Like 10 positions that are all looking at like 85, 90+% chance of profit. It's just a matter of like letting these things roll to expiration. But I looked at the trades today. It's like we can also tighten up our risk, pull in more credit, because we're a little bit more confident that as we get a market to dip, we can do a strategy 2, but not have to go out 15%. Right. So again, tomorrow's masterclass, we'll talk more about that. Um, yeah. So if you're in the session, we'll do it tomorrow. If you have my practical options, Lee, then I'm trying to think. It's not practical options, just because the put condor call condor is a little bit. It's a 4-leg trade. But look, I mean, I'll show you what it looks like. Here is where's my SLV. So if I go SPX, okay, and I'm going to go out. Let's find an expiration out to. Make sure this is all correct. So let's go to the end of the year. This is about 83 days out. Okay. So if I wanted to go out, so I'm going to add in a, let me clear this trade out. So what do I have? Remove. Okay. So I'm going to add in a buy put and a sell put and a sell put and a buy put. Right. So I'm just going to throw a number out there. I think we looked at like 6,000 today for my waterfall income masterclass. So if I were to buy a 6,000 and then sell the 90 and then sell the 80 and then buy below that for defined risk 60-ish. This is about right. Okay, this would be an example of a pretty forgiving strategy too. Right now, price is around 6,700. I'm giving this market some forgiveness where we'd have to come down below 6,000 for me to take on risk. In fact, my line in the sand is 59.80. So if price on this SPX stays above 59.80, I keep $60. If price goes sideways, I keep $60. If price goes up, I keep $60. If price goes down, I keep $60. If price goes all the way down and ends up getting into a potential profit trap, 6,000 all the way down to 59.80 is a profit trap worth up to $1,000. So I could turn a $60 income trade into a $1,000 winner. And so my break even on this trade would be below 59.70. So from current price at 67.30 all the way down to 59.70, I have that much room for error. And whatever this percentage wise, let's do the math. If we did 67.30, okay, so 67.30 minus 59.70, okay, I have 760 points of forgiveness on a 67.30 index. That is an 11% buffer. So as long as price by the end of the year does not fall and close below 11%, I make money. So as my deployments these last month or two have been cautiously bullish, this is one of the trades that I've been taking for waterfall income. Okay. So it's a combination. This is why I do a masterclass on this because, just out of the gates, it's a little bit, confusing at first because it's like, wait, we're doing a debit spread and a credit spread? Yes. But what this is this gives me a lot of wiggle room so price can go nowhere, down a little bit, down 11%, or up to infinity, and I can still make this a steady income trade. Okay? So there's your quick and dirty version of it. But we're doing a masterclass on this tomorrow inside of waterfall income. And if you want to dive into any of these strategies too, it's like I do one-on-one workshops with individuals. I do up to groups of 10 people. So if you want to arrange that, it's inside my Discord. You can click on the private instruction tab, and there's 1 hour, 4 hour blocks. So I just ask for my time to get paid for, but the recordings are given to you for whatever you want, for your convenience to review, and we can touch base whenever you need. Cool. All right. So right now, like I said, 6 days of nothing. Gold has finally hit a bit of a wall. This is probably the first candle that looks decisive in a while, besides obviously being decisively bullish. But we went from a 40-60 high. We pulled back a decent amount. Gold is down. Doesn't look like much, but 1.5%. To me, if you zoom in on this chart, let's go to like a 1 hour now. Is this a structural breakdown? Not necessarily. Not necessarily. But when we look at the technicals on the daily, we are so far away from our 21 and our 50 that even if price goes sideways, right, allow the moving averages to catch up. Randy on the reverse, can I let it expire? You need it below 40. Randy, is that you in the chat? Is that you in the chat? You need it to stay below 67.40 for today's daily profit play. If you did that reverse with me, it needs to stay below 67.40. Now, we only have 14 minutes left. The expected move, 40 is looking pretty good at this time, but the 35 is filling up a little bit. Maybe this thing comes back down before the end of the day. It just depends on if this like 25 or 20 fills up. But right now what is it being offered for right now? I mean, if you don't have to hold it all the way to expiration, I wouldn't. Let's go to I mean, it's trading for like 525, 530, 535. I would just take the profit, man. It's like the last thing you want to do is have price somehow shoot up to 41 and you end up taking a small loss on the trade, right? If it's at 41, you're basically break even because we have a $1.20 max profit. So if it's at 67, 41.20, that's break even. But below 40 is great. That's full profit at $1.20. But you've got right now it's trading for like 515, 520, 525. The hard part is sometimes at the end of the day, those trades are not as liquid as I'd like them to be. So, 525 debit or 530 debit or 540, like just look, man, take 70, $80 out of it. It's a win. I just rather have that money in the pocket, comfort of the win versus what happens if price squeezes up in the final minutes here and gets up above 40 and then you take on risk for no reason. Okay. Treasures, yes, there was a class today. Yeah, well, I mean, I'm live every day and I said all week I'm doing a waterfall income masterclass on Thursday and Friday. I also posted in Telegram. So I'm trying to make it as convenient as possible if you're following me. Here is waterfall income. Starting class live. I talked about it all morning. I talked about it all week. So sorry if you didn't get the email on that, but I mean, I'm with you live every single day. So I've communicated it. There will be class tomorrow at 1 p.m. Today's recording will be posted by tomorrow, so you can check it out. It's Strategy 1. This is also like the 12th class I've taught in the last couple of months. So there's plenty of review inside the classroom if you want to jump into that Strategy 1, Strategy 2 review. So tomorrow at 1 p.m. Eastern Time. Waterfall income Friday, 1 p.m. Eastern Time. Okay, today's class, 1 p.m. Eastern Time. So that recording will be in your classroom under Masterclass and Trainings. Timestamp for today, October 9th, and then tomorrow's class will be 1 p.m. Eastern Time. When it's recorded, processed, posted, it'll be in the classroom with a 10/10 or October 10th timestamp. Strategy 1, Strategy 2. Okay. All right. I mean, just go up 5 cents, go to 525, go to 530. I know you're giving back some profit there, but I'm telling you, like, I'm just hoping don't get cute. I know it might be a smaller win than you want, but I'd rather do that than play with fire of maybe this thing getting up and sneaking above 67.40. You don't want to see that. So even if it's 25, 30, 35, you're still up, 75, $80 on the day. The max profit was 120. So I would just take the winner if you can get it. But fingers crossed that we don't get up above 40. Right now, that 35 seems to be a pretty big sticky point where maybe that's where it stalls. We don't get to 40 today. But I just don't know. I mean, there's 10 minutes left, and a lot of crap happens in 10 minutes in these 0 days. There you go. Out of 520. 90, I mean, $90, man. That's $100. There you go. That's $100 a contract. Good job, Randy. Good fill, man. Everyone, let's give a round of applause in the chat for Randy. Good win, dude. Yep, good win. Now, again, now when this thing is closing out here in about 10 minutes, let's see what Randy's decision would have given him, right? Is it worth the extra 20 cents or is price going to make a run up to 40 plus and actually be risk on the day? I don't know. But, for me, like that extra $20 is not really worth it when it's like, I've got profit, the final 10 minutes, things can get a little nuts. So take the win. Good stuff. Okay. What else? We'll keep an eye on this one for the next 10 minutes before we close up the session today. Tomorrow morning, we will be live for daily profit plan. The market today did roll over into negative gamma. As far as the ATRs are concerned, we are back between the 50 and the 50. So we gapped up a little bit, fell below into negative gamma at 67.45, low for the day at 67.16. I did have my put side gamma around 67.20 that was hit today. That was really, really nice. That's why I did the double up trade. It came right down to that cluster between 25 and 20, and it bottomed out right around that 20 handle. So we had a low today at 16. Okay. So this is why I use real-time gamma. These flows help me a ton every single day with this visual roadmap. And going for the rest of the day, between the 50 and we'll see where it closes. So 9 minutes to go. Let's see where it is. Tomorrow, I mean, as far as the structure goes, we still have resistance here. We still have support here, and it's just a big nothing burger, right? So what's Friday? I have no clue, man. Is Friday going to be a big indecision day because there's no news? Possibly, right? Is Friday going to make a break for it and actually get down below the 6,700 handle? Possibly. I don't know. Come back and trade tomorrow with me. We'll figure it out. Okay. Major resistance levels. Well, today's resistance level was 67.75 and 67.15 and 20. So from the daily perspective there, Janelle, 75 and 80 on the call side resistance and 15 and 20 and 15 on the put side support. That's where it was in the 0 day. What I can do is I can go into let me update this to the end of the week. So not just the 0 day, but let's go to tomorrow. So let me go to the short term. This will pull in tomorrow's order flows. And, again, it's pretty spaced out going into tomorrow. We could go down to 6,700 tomorrow. We could go all the way up to 6,800 tomorrow. I mean, this doesn't mean anything until tomorrow morning officially, but it just shows us that there are some flows out there. Now, I do see a little bit more of the call resistance. It's going to be difficult for the market to get through. I'd say getting through tomorrow's like 67.70 handle. To go from 67.70 to 6,800, that's a big, big, big move on the day. I don't think we're necessarily going to do that, right? But to the downside, we have kind of a big gamma level between 67 and up to 68. So if I had my way, I'm selling call spreads above 68, or I'm selling put spreads below 67. That should be the market's kind of containment for the day. Yeah, it's Columbus Day on Monday, but the markets are open from what I saw. Somebody asked me that earlier in a class, or actually during the webinar. It's Columbus Day, but the markets are open. So, I mean, it could be a slow day because of the bank holiday, but markets are still open. Let's go ultra short term. And then we're back for today. And we are at 34, almost 67.35 right now. All right, 6 minutes left. Let's see what Randy's trade would have yielded. Is it worth the extra 20 cents? Maybe if it stays below 40. But that's also taking the trade late in the day. I know down here, it was showing Randy, you got filled at a great price, man. This was showing like 520, 515, 520, 515 for most of the afternoon. So you exiting at 520 is pretty good, man. I would be happy with that trade myself. Okay. Very nice there. Fuel prices. Let's go currency strength for the day. Currency strength. Big old rip on the dollar today. We have pound in New Zealand weaker. Dollar is strong. Let's have a look at that. Okay. So the dollar is breaking that falling wedge officially. And I think there's room to continue this little short-term squeeze. Dollar strength to 100, maybe dollar strength to this 102 handle. This is what I had said earlier. I posted this screenshot in Telegram. If we get above this falling wedge structure, I think a run into 100 or 102 is a risk-off move. Even though the market has made a low, high, higher, low, higher high, we haven't seen risk-off in the markets. We have seen like resiliency and stubborn highs in the markets. But I don't know if the dollar necessarily breaks it. It's just, we've got some risk-off trading in the dollar. I could see that this surge today is possibly giving pause to the rip in gold and silver. Again, and that's fine. A dollar that reaches some good structural highs that we can short again. Well, yeah, I would like to position for silver dips and gold dips, and I'd like to position for a pullback in the markets too if we get one. So we'll see what the dollar does, but I think it's still likely heading higher. There's room up to 100. There's room to 101, 102. I'd be looking to fade it. So I've said this before on some of the really cross correlated currency pairs. Euro dollar, I just couldn't buy above 1800. I just refused. That would have been a great spot to be selling. That would have been a great spot during FOMC when you had the poke of those highs at 1840. That trade is now up about 300 pips. So I've been saying for a while that if we pull back to 14 or 13 or 1200, looking to buy some dips on the euro dollar. Okay. This also could be, is that I guess that's a channel that I drew freehand. So let me use some actual trend lines. So if I go from low to high there and then clone that line, now we actually have a real channel. So something along these lines there. So if we're at resistance, is there room to fall? Of course. There's room to pull back to 1200. There's room to pull back to 110. There's room to pull back to 108. But I don't think the euro dollar takes out the lows at 102. I don't think the dollar is going to stay that strong. So I think dollar strong looks good for another maybe 100 to 300 points. So we're at 99.48. I think we get to up to 101 or 102, and then we start looking at some resistance. To me, this is the type of pattern. It'd be like a flat pattern. So high to low swing, flat pattern, and then we resume the bear trend. Okay. The other side of that trade too is because this market has fallen. This is where the falling wedge started. So that is a good recovery spot. So we fall, lower highs, lower lows, lower highs, lower lows, and then we come back up and we test. So either this is resistance and we sell from here, or this is a pullback for a higher low, one more push up, and then this thing falls. And you look at that pattern, that would be a larger harmonic, right? If this is your X, A, B, C, D, something like this, one of those harmonic patterns, fancy stuff. But if you space it out over here, somewhere between like this 102 to maybe 105.6 zone, I mean, this is about as high as I could see the dollar going because this is pretty inefficient. If you look at this area right in here, I think there's a lot of overhead supply and a lot of resistance in that zone. So if we're going to make a run, pullback, run again, wait for a trend line break, look for topping patterns, resume dollar selling. It could squeeze up to 103, 104. It could be a surprise move this year. Who knows? It's a very crowded trade to just assume that the dollar is going to get weaker. We've been needing a correction in the markets for a minute, and it looks like we're possibly getting it if the dollar continues to lead. Okay, so yeah, euro dollar. Watch for some pullbacks. Pound dollar. I think we head back down towards 130. To be honest, I think 130 is a very realistic number. Aussie dollar hasn't really budged a lot, but it is pulling back. I mean, this is crazy. Like I suppose like buy the cluster dips on the Aussie dollar. You just got to scale into this thing and make sure. I don't think it's going back to below 6,000. So if you're willing to kind of dollar cost average in, it looks a little bit better. Plus the commodity space, it favors the Aussie. If we have strong China that favors the Aussie, we have strong gold that favors the Aussie. All these things would be pretty good. So if you're trading small, I could see the Aussie dollar being a pretty good trade. New Zealand dollar, they just cut rates. This one's a little bit weaker, but I still like the structure of, as long as we don't take out 55, maybe waiting for a better turn though. I mean, New Zealand's a little bit weaker than the Aussie. So that makes me want to look at the Aussie New Zealand, which is now above 1400. This is probably a really good looking sell trade, to be honest, because hitting this top with divergence, I think we end up coming back down. So if it's a, sell on Aussie New Zealand, stop loss above the 115 handle, we have room to fall. We're closing at 34.91. Lee, your 40 was safe, but I think you still did the right thing and took the profit. Pocket at 12.80 and pocket at 11.80 on the Aussie New Zealand. So if I'm going to take a short here, I like this trade. Stop loss above. Go after that level, about 1,200. So favorable. I'd say it's probably like a 2-to-1 or so on that trade. But I do like that Aussie New Zealand. Good technicals on this one. And we could pull back more. This pair is notorious for like 786 pullbacks. So we'll see what it does. But pretty solid resistance. This is back to 2022. Okay. We closed at 67.34.91. We closed at 67.35. What? 35.12. My broker SPX has 67.35.11. So 35. Let's get this updated in daily profit play. So tracker 67.35. Take a screenshot. We closed inside the 50% ATRs, barely, but this is the day. So we started here, closed in between our 50s. So copying the link, updating this in the tracker. So call side. Win the day. The DPP was a reverse DPP. Close for profit. Expired for full profit. And double up. Put fly at 6720. Offered $4 credit on an 85-cent debit. Not too shabby. Did it stay between the 50s? Yes, it did. And win the day? Yes, we did. Nice little summary. Last minute candle was up 5 points. It was, but our level, our dead zone was 40. So we did not see price get above it. So going from the highs around 65 down to 67.15. Now I'm curious on the market maker side from the previous day's close, plus or minus 18 points. Market, I think today expected like a 21-point move. Kind of crazy, right? We go up a little bit, we slide, 48 points, but for the plus minus from yesterday's close, it's inside that market maker move. It was a 21 today, which is pretty tight. We obviously had a lot more volatility, but the market still respected it. That also means that if you did a standard daily profit play today, that level was around, I want to say it was like 65 and 70 on the call side and like 2015 on the put side. Even that trade would have been profitable today. So I didn't like that the IV was low. I didn't like that the plus minus was only 21. So that's why I decided to take the more directional approach today, which we got paid on. But anyway, all is well. We'll take the dub on the day. We'll come back and do it again tomorrow. Is gold as susceptible to fundamentals as Forex indexes? Gold is susceptible to the dollar. If the dollar is going to make this ridiculous bullish run right now and continue, then I think gold could be vulnerable. I also think that gold it's so mainstream right now that I wouldn't be surprised if retail traders are just jumping on the bandwagon and they're going to be shaken out with a maybe a 5 to 10% correction. So I don't know. Look at the technicals. I think this pullback is long overdue. We're really overstretched. A 21, a 50, any of these levels. So I would say sideways gold. If we accumulate like we did here, sideways, then it's still by the dip. But because it went up so parabolically, I feel like we can come back down and kind of give back some gains pretty quickly. Maybe there's some heavy profit taking, and that's okay, right? I'm still looking at a position longer term on gold. But I would be positioning for literally a 10, 15, 20% correction. And you can do a lot with, puts and ratio spreads, and you can be way out of the money here and still have plenty of profit opportunity. So if it pulls back enough, awesome. But gold and silver both, have been crushing it for the year. Silver 51.21 poking all-time highs. First time since 2011, first time since 1980. All-time highs on silver. I don't think it stops. I think that, now we look at the structure. We look at this overall channel and I don't know. Maybe this is the technical look, something like that. And we just blew through it. So I don't really have anything to go off of outside of I measure and I look at, I could see us up to, 56. I could see us up to 60. I could see us like, this is a new asset that has no cap anymore. It has no ceiling. So now we're in uncharted space and silver can do whatever it needs to do. But I think now it becomes a, more of a strategic allocation. I think it's something that probably continues to gain as it's harder and harder to find. It's needed. It's not only the industrial use side, but also the strategic metal side. It's poor man's gold, so it's valuable and it's hard to find. It's hard to mine. But anyway, just expect some volatility. It's like, it's been a good run. I'm happy I took some profit. Now I'm looking to start over. Okay. All right. I'll let you go for today. Thanks for being with me. Tomorrow morning, come back and join me live, 9 a.m. Eastern Time, daily profit plan. If you follow my Telegram, that will be posted in the AM. Also tomorrow at 1 p.m. Eastern Time, masterclass on waterfall income. I will probably end up doing a video update for tomorrow to wrap up the week. Hopefully we have a nice daily win for daily profit play. Overall, like good week so far. Took $150,000 in profits in gold and silver. That's been hard earned. So it's been a nice little win. And overall, just patiently waiting for some dips. Hopefully we get them. Would a pullback 3,200 the bull flag be enough? That seems pretty aggressive. Are you're talking gold XAUSD 30? Are you talking 32? 32 is way down there, man. I don't know. I mean, if we pull back to, I mean, if we're lucky, we pull back to 3,500. I'd love to see a really healthy correction here, but I don't know, man. I think that there's so much like fervor for gold right now. I think that you could just probably buy 3,800. But like I said, I positioned for this in my A1 Pulver alerts. Is I'm just doing like $1,000, $1,000, $1,000, $1,000, $1,000. That's all I'm doing. That's the easiest way to start. I can start throwing in options. I can do all sorts of stuff, but just literally, if I want to own gold, put it in the portfolio, get a discount. That's better than not having it. It's better than buying the highs and watching this thing pull back 10, 15, 20%. So I'll start small. I'll build a position. I'll get a feel for it. And hopefully I can establish more, option related strategies for income. Okay. I'll let you go for today. If you are watching, I got to go. Somebody's calling me on Discord.